Hey guys, this is the most important chart that you will not see anyone else talking about, and that is the 6-month chart on the S&P 500. Something today happened that's so historic that only two times since the late 1800s, all the way back to the late 1800s, we're talking about over 140 years of stock market analysis, something happened today that's only occurred two times in the history of the S&P 500, and that is a bearish engulfing candle here at the top of the market, which is basically where we engulf the previous 6-month period and we close on lows like that. I mean, it's so rare that, like I said, only occurred two times. And what were those two times? 1973, which we know how bad that time was, and in 1929, which we know how bad that time period was as well too. So I went ahead and did a little bit of math for everyone here, so you don't have to look this up yourself. But the 1929 bearish engulfing candle that we had, from the bottom of the candle close to the actual bottom where we bottomed out, it went 77% down, and it took 2.5 years to reach that point from the close of that candle at the bottom there. So 77% down over a 2.5 year period. The 1973 crash that we had, it went down a little bit less. It was 42% from the bottom of the candle close to the bottom of the market, and it took 1.5 years. So what I did over here, since this is the only third time that this has ever happened, and things look like they could get severe, is I took the two and I averaged them together. The average move of those two would come out to approximately 60%. The average time being about 2 years, which would put us in the summer of 2024 that we would find somewhere a bottom. And on the S&P 500, which is currently at 3785, 60% down would put us at just above 1500, a nice round psychological number. It's also going to be below this moving average as well, which is very important because you can see that it doesn't like to ever close usually the 6-month candle below it. You can see that it closed just above it there. You can see that it even wicked and then it moved above it. And you can see here that it also went below it and then closed above it. So what would probably happen based on this analysis and historical averages is we could see over the next couple of years, we end up coming down to this $1,500 mark. We wick down below this green moving average, and then we close back above it somewhere around 2000, and that's when we see a bull market begin. But this is some serious stuff. I mean, this is something that's only occurred two times in over 140 years. Nobody's talking about it. This is the worst kind of candle that you could possibly have happen, and what it means is that there's usually immense downside from here. And if you look at the current price of Bitcoin and Ethereum and all different markets, if you're talking about a 60% haircut on the S&P 500, you're probably looking at a Bitcoin, if you're lucky, at 10,000, but most likely even lower than 10,000. And I know everybody keeps saying, I'll be buying at 10,000 and everybody and their uncle will be buying at 10,000, but that's not how psychology works. We all know that. Everybody was saying, oh, I'll be buying Bitcoin at 20,000, and then it goes to 20,000 and they say, well, I'll buy it if it goes below it, and then it goes to 17.5, and some people bought. But now everybody has sights on a 12K, a 13K, a 10K. What happens when it gets to those kind of prices and the fear that's in the market? All of a sudden 10K is not the target of people. They want something even lower. The greed sets in. But anyway, share this chart with some of your friends. Don't take everything I'm saying like it's going to for sure happen, but you can't ignore history. This is super, super serious. And I was listening to Michael Burry today from the Big Short movie, if some of you guys have seen that, and he does think that we are in for the mother of all crashes, and I totally agree. So this whole like bottoming out at 17.5, like some people have talked about, I don't even think that's even close to where we're going to bottom out at. Anyway, enjoy this, and I hope that it was helpful and it was enlightening. Thanks, guys.